Good morning and welcome to a dive through the market with Legacy Capital. So we'll be looking at DXY, we'll be looking at EURUSD, we'll be looking at GBPUSD. But before we get into it, let's take a look at the Forex Factory. So today is Monday, so we'll be looking at the market generalities of the market from today, Monday the 5th, right up to Friday the 9th. So we'll just go through a Forex Factory today, Monday. We noticed that, okay, for the high impact news today, we have the ISM service PMI definitely on Tuesday, tomorrow. As we have cash rate flow, RBA monetary policy, and RBA's rate statement for the Australian dollar, and we also have employment change for the New Zealand dollar. On Wednesday, we don't really have any high impact news. On Thursday, we have Bullock's speech, and then we also have the inflation rate both for the Australian dollar and the New Zealand dollar respectively. Then we have unemployment claims for the United States dollar on that same Thursday. And on Friday the 9th, we'll be having employment change and unemployment rate for the Canadian dollar. Those are the specific high impact news we should be at the lookout for within this week. But for now, our point of interest this Monday will be the ISM service PMI for the US dollar that will be released at 3 p.m. Central African time. With that in mind, let's go straight to look at the DXY to see what we should be expecting with DXY, our key levels, where we are expecting the points that the market can probably reverse from, or the point that the market can break. So we should move straight to DXY. If we notice critically, DXY is actually on a complete downtrend right from last week, which of course was caused by the CPI that was released last week. If you recall very well, you'll see that the data for the CPI showed an extremely weak dollar, which caused the XY to fall right down. And early this morning, it has consolidated and it continued with the sell. Now, we don't know yet if it is printing a reversal pattern, but technical analysis, technical constraint will confirm or will debunk if to say that the pattern is still moving downward. So for now, I would like us to move to the daily time frame. Let's move to the weekly time frame. Yeah, let's start from the weekly time frame. On the weekly time frame, we see clearly that the XY is currently at a key level that the market initially had gone to the level and failed to break. So the market had moved down to this level, failed to break, then moved back up, and is currently at this level. So on the weekly time frame, this is a key level which the market can specifically retrace back from it. But if in case the market fails to retrace from it, if the market breaks from here, then what should be our expectation? Just beneath that level, we see that we have a demand zone. We have a demand zone here that the market initially got to the level, rejected it, and bought from there. So if in case on the weekly time frame the market happens to break this key level, and then we should be expecting that the market can get to this level and then buy from there. And if the market is to buy from this level moving upward, then what should be our expectation? We should definitely be expecting to see maybe a drop down in the GU and EURUSD. So if the market moves to this level, it can definitely pull back right up to this level. That's a scenario we are expecting. Or better still, the market can just take it from this level that it is now, then pull up back to this zone. That's another option. Or better still, if the market clears off the liquidity here, gets to this zone, then maybe it can extend down here and then maybe reject this zone by a week. In such a scenario, we'll see the market moving like this. So that is our expectation with DXY as far as the weekly time frame is concerned. Then if we move on to the daily time frame, I think on the daily time frame the market will communicate with us better. On the daily time frame, you will see that okay, on this zone where the market is currently now, the zone has actually acted as a key demand zone that already cleared off liquidity in this zone. So if the market breaks this zone, the market will have to deal with this consolidation here, this consolidation we are having here, before the market will be able to move into the next demand zone. So if the market breaks this zone, the market has to deal with this consolidation before moving into this demand zone and subsequently buying from the demand zone. That is what the market is presenting to us for now. So on the daily time frame, we are also seeing a possible rejection from this zone, and if the market finally rejects this zone, we'll be having a double bottom here that is confirming to us that the market can buy possibly to this zone. And definitely when the market gets to this zone on the daily time frame, what will be our expectation? When the market moves to this zone on the daily time frame, if to say that the market successfully moved to this zone, we'll see definitely a rejection, then momentum, we'll see a pullback, and then a momentum will push it up to this level. So this is what we are looking at as far as the daily time frame is concerned. So for now, the market is currently on a key zone. So as traders, we should watch out to see the reaction of the market as far as this zone is concerned. Then from the daily time frame, if we are checking the 4 hours time frame, we'll see that the market actually is in a downtrend, as we have seen on the weekly, daily time frame, and now it is currently in the key zone. The market has pushed down, it has touched the zone, but it has rejected it. Can it be possible that the market is trying to build momentum to break the zone? It's very possible, because the market can break the zone and move into this demand zone. So we should watch out. This is not a zone whereby you should be taking a trade. You should wait to see the market either rejecting the zone or the market moving down to this demand zone and then changing character before you go into the market. Because obviously the market can still break this structure here and move down to the zone. So for now, we are giving it to the overall bias of the market, which is the downtrend for now on the 4 hours time frame. So with that on the XY, we have to move to EURUSD. On EURUSD, we'll see that the market has been on a bullish momentum, bullish movement right from this level. We have a break of structure here, telling us that the buyers are still in the market and the market can keep on pushing forward. If we want to zoom our graph, we'll see that the market is actually reacting based on this zone. The market is reacting based on this zone that the market had failed to break initially. So this is actually a supply zone, but now this is not yet a guarantee that the market will sell from here, because before getting into this zone, the market actually break this structure, and the market, this candle did not close like a liquid grab candle. It closed like a full-fledged buying candle, telling us that the buyer's momentum is still in the market. So if the XY will keep on selling, then we should be expecting to see that EURUSD keeps on buying. It can push up from that level right up to this zone. As far as it breaks this level, we should be expecting it to subsequently break this, and we should be expecting the XY to get to the level of 1.11246 within the week or next week. But we should be expecting to see a movement whereby it breaks this week and then keeps on pushing up. If not the case, if it retraces back from there, then we should be expecting it to maybe test back the level of 1.09376, or it moves down right to 1.07897. So that should be our expectations as far as EURUSD is concerned. Now on to GBPUSD. What should we be expecting as far as GBPUSD is concerned? As far as GBPUSD is concerned, we'll see that it has had some crazy moves this morning. As far as DXY is concerned, is also respecting the downtrend. GBPUSD is respecting the downtrend. So we notice that the market actually pushed to this zone. during our last NFP, then it pulled back, it consolidated. But now, what worthy of note is that early this morning, the market had pushed down to this level, then retraced back, and is now trying to build sellers momentum, which of course is telling us that the market is selling. And this is actually a new zone that the market created. This is actually a new zone the market created. So there is a high possibility that the market can either retrace back to this trend line, or the market can maybe push down right down to this demand zone before moving back to the trend line. But what should we be at the watch out for? We need to see the market before we take any conveniently buy position. We need to see that the market pushes up to this zone, breaks this trend line. If the market breaks this trend line, then definitely we should be confident that we will see a scenario in the market as such, whereby the market breaks, retests, and then push back up to this level. So to be on the safe side, unless the market has broken this trend line, you should not yet take a buy position as far as GBPUSD is concerned. So watch out, because where the key zone, the demand zone we have seen on EURUSD, if the market retraces back from the demand zone, then we will be expecting to see a bullish DXY. Meanwhile, GBPUSD and EURUSD will definitely push down right up to this level. We'll be expecting GBPUSD to get down to this demand zone, which is 1.26293. If it happens that way, meanwhile you are already in this buy position, it will definitely clear off your stop loss and it will be disastrous for you. That is how we are looking at the market this week. If you